Hello guys and welcome back to the channel. So today was a very interesting day for Rocket Lab and I quickly wanted to make a video about what has happened to the stock and what it means for the future, because this is good news for the future. So I'm sure if you're a Rocket Lab shareholder, you saw that today, most of the day, the stock was actually down and in the red. And then I went on my son's hockey practice and I didn't check the stock for a while. And I came back and I opened my phone and I saw that the stock was skyrocketing. And I was like, what the heck happened? And of course, it was the Powell speech. I mean, I suspected that Powell had to have said something, you know, very, very good for the stock. So I just finished watching his speech, and basically it looks like we are at the end of the rate hiking cycle, and this has very big implications for Rocket Lab. So I'm gonna dive into it. This is going to be a short video. Please make sure that you're subscribed. So we are at a point, you know, when you're a stock market investor, you have to look at your risk and reward, right? And when it comes to the rate hikes, the thing that can happen, very likely, is that we stay the same, which is what we already know, right? Or the interest rates can go lower, which is very, very good for growth stocks. There is very, very, very little chance that the interest rates are going to go higher. And even if they go higher, we are very close to the peak. So we are starting to get into a situation where, you know, you are not really taking a risk betting that the interest rates are going to stay the same or go down. And even if you just bet that they will go down, and certain stocks benefit a lot more than others. So Palantir, which is one of my other very big holdings, they are not really affected by the interest rates. They are only inadvertently affected, meaning that if the interest rates go higher, like, it destroys the rest of the economy, and then Palantir has a harder time to expand, right? But nothing happens to the company. Whereas Rocket Lab is a very small cap company, and they are a money-losing company, and there is a high chance that they will need to raise money or they need to take a loan in the company. So obviously, when you have a money-losing company that has certain risks, and when the financial conditions are very, very tight, then you don't really know at what terms you can raise equity or at what terms you can raise loan. And therefore, investors become very worried about the stock. And if I look at Rocket Lab's valuation, as I said, I've done countless videos on this, it doesn't make sense to me how low the valuation is. And the only way that I can justify how low the valuation is that investors look at this company and they say that there is a too much risk that they will need to raise money again. And this is not even the problem. So the fact of having to raise money again is not a problem. But the problem is that if the stock price stays very low and the financial conditions on the market are very unfavorable, then either the company will have to take a very high interest loan, which will make the balance sheet horrible, or the company will have to dilute shareholders like crazy. So imagine if the stock price goes down to let's say 3 or in the 2s. So that would mean that Rocket Lab is at a market cap over around 1 billion. And let's say that they would need to raise another 300-400 million, right? The only way that they can raise that in equity is that they dilute us, the shareholders, by 30-40%, which is crazy. That is crazy, okay? Or again, that they take a loan, a 300 million loan at maybe 10% interest because they're a risky company, and that would just look horrible on the balance sheet. So that's very, very bad. But if financial conditions ease, and it looks like that's what it's going to do, then this worry starts to go away, because one of the consequences of the financial conditions easing is that growth stocks are going to basically go to the moon and increase in value. And as the growth stocks increase in value, it means that the market cap is going to go up. So if they need equity, the existing shareholders get diluted less. But also, if financial conditions are easing, it is easier to raise equity, it is cheaper to take loans, and then this worry about Rocket Lab is becoming less and less and less. So if you looked at my watch list today, you saw that Palantir was up a few percent, Tesla was up a few percent, everything was like slightly up in the 1% range. And then you looked at Rocket Lab and this baby was up, 7%, it's almost in the fives. And honestly, it makes sense because Rocket Lab really, really needs the stock price to go up to provide security for, it's almost like a self-fulfilling prophecy. The higher the stock price goes, the more valuable the company is, because the safer they are. If they need to, the more options they have. If they want to raise equity, they can, no problem. They will barely dilute us. And if they want to take a loan, they can, no problem, because financial conditions are easy. And the lower the stock price goes, it's the same, it's a self-fulfilling prophecy. The riskier the company gets, because they have less and less options to handle financing. And my personal prediction is that we are going to close out the year over the $5 mark. And we are going to have a fantastic year next year, because I think that it was illogical that Rocket Lab was priced this low. I mean, I made countless videos about it. And yeah, so it's been a fantastic day. If you're a Rocket Lab shareholder, congratulations, very well done. Let me know in the comments how much you were up today. And yeah, please make sure you subscribe, and I'll see you in the next video. Ciao, ciao.